Hello guys, so that's the video weekly recap for the week that ended in the 6th of June 2020. And in this video we'll basically go through some of the trades that I've taken during this week. Some of these trades we've discussed already, like part of the US morning sessions, or it might have been like basically I was carrying out some of these swing trades from the week before. But anyhow, we'll just basically go through a quick recap, and I hope that this will help you again in understanding the rationale behind the trades, the follow up, the position management of the trades, understanding why some of the trades have been able to make money, or some that have been haven't been able to and lost money. So anyhow, let's get going. And before that, I will just I'll get rid of the webcam. I'll keep it like a full screen so that it's better for you to have. Okay, so let's start with GMBL. So GMBL, looking at the context again, you remember that was the week before. Last week we had a big move in some of the relative related stocks in sympathy to, DraftKings, and we said like all the esports, especially with all the sports, reopening now in the States, there was like definitely some big demand that was coming back. So that was the stock that I had traded, and so that's the kind of like big picture. We've had like the big move on that week, and let's have a look at the daily. So the daily chart was this one. So I traded that on that day, which was the Friday, the week before. That's when I traded it. And what happened is that I took, if you remember, you will be on some of the videos that we covered as well on some of the US morning sessions, and also I think the video recap from last week where I covered that. But let's go through the 60-minute bar chart. So what we had is like I had played this move here where we had gone through, I'd basically taken like an OPR breaking range, and I took a first TP, second TP, all around basically. I think that the level of entry was around that level, around 6.95, $7. The TPs were all around that level, around between 8 and 8 and a quarter. I came back, and then I had basically a leftover from this position. So I started this week with a leftover position from GMBL. I'd said that I would be working a stop just below that area, which was that level, that area of break below the MF50, 15 minutes, and and that sort of level of support that we had found over the past few days. Um, I got executed on that stop, so I was I think I could almost like broke even, or maybe I made like 10, 15 cents on that. But the point was that I didn't like the way the market action was going, and I said I'd rather basically take, not being stopped at break even on that one, but just wait to see if there's any entry point that I could where I could get back on that thing if I can see some more momentum. But what kind of like triggered the way that I thought about this was that when the market had this leftover here, and I thought that we could have had like immediately another bounce and a retest of the high, which we didn't. So, that's why I felt, I don't think that the market's going to do much on that. I got executed. As a matter of fact, we had a retest, and see, we didn't manage to basically retest the whole high that we made around 975. So the market has been like in kind of doldrums right now, not doing much. But as a follow-up on that position, I wanted to keep you up. So GMBL, I'm out now. The other thing that I covered in the video recap from last week was C Limited. So C Limited, again, let's have a look at the big context. It just has been like a very a great performer this year. And sorry, guys. So again, electronic gaming, multimedia, that's been like a renewed interest on that. There was definitely this area here that was a great area that, to come in a few weeks ago, like we've seen bounce on the MA50. And again, I know I keep on repeating myself, but it's always important to see that when we have this sort of trend and we have like right now we have like a parabolic type of move, the market will find support on the short moving averages. So either the moving average 10, some players out there use moving average 9, 7, doesn't really make a big difference. The important thing is that you see that the market will find some refuge on this market on the moving average, the short moving average, until it doesn't. But then usually we're if we're in a real momentum play, if we've got real interest from the players, they will find some nice support on moving average 50. And no matter what, basically the uh, the unit of time that we're looking at. So right now we're looking at the weekly, and let's look at the daily. And the daily, basically, the moving average 50 was corresponding on the daily at the moving average 200. Look like as you know, moving average 200 is a kind of like make or break type of trend support or resistance, depending on what side of the market we play. But found good support just at the beginning of at the end of March, and since then, it's been going up and up and up. And I played this thing, if you remember well, around here when we had a flush down to the first level of support on moving average 10 daily, and which was corresponding also to this area of price support here around all around like the 72, 70, 72.80, 70, you know, $4. So let's look at the again the 60 minutes. Go down. So that's when I played it. Okay, on the pullback to the moving average 50, 60 minutes bar chart, I played an engulfing pattern, and then I had a first trade. I basically took a first uh, partial profit here. Then I took another partial profit here on the break of VWAP again because I didn't like the market configuration, and I thought I'll basically revisit later. Came back in this. That was, by the way, that was the week of 29th of May. So that was the week before. Okay, came back in again on the second attempt pullback to the moving average 50, 60 minutes. Took a partial profit on this second entry here, and took a second partial profit at this level, which was corresponding to the old high that we have achieved at 83.85. So I think I took my partial, like I said, at 83 and a half. And like I said, I've kept a residue of a position on that. At this stage, I'm just basically going to follow the market and see whether I've got a lot more juice in this. I've got a target, a price target around the $100 mark, and I really don't know whether we're going to basically achieve that. But at this stage, what I'm doing is I'm following the moving average 10 as a trailing stop. So if we break that, today, just below like 83, 83.80, and that, 83 and 3/4, let's say, that's where I'll be at. So I'll be out almost at the same level where, I got out on the last TP, but I'll let the market basically decide, or let me know when I should be coming out. Because at the moment, I don't have real levels. Like I said last time, I don't have anything to the left of the chart. I don't have basically any reference. And like I said, probably, we're going into the $90 mark, which is a round number. Maybe the market's is gonna kind of like stop here and start, going back down or, retracing a little bit, or maybe not. Maybe it's just going to keep on going and go to the next $10 mark. So we'll see. But that's the game plan is that I'm following. I'm having my trailing stop using the MA10 daily, and we'll see what happens. One thing that we had discussed, and I've been a bit disappointed, but nevertheless, that's what happened. So last time that we talked, we said that for the past few weeks we've been keeping that one on the radar, and I'd said that just above the high of this candle, which was 5.15, $5.15, I was interested to play that with a stop just below the around 450 mark. So we talked about the 60-70 cents stop, and first aim was around the moving average 50 daily in that area, basically 570, 610. So let's call it 5.75 to make it easy. So it would have been like an entry around 515 and looking for an upside potential profit of about 60 cents. About the same thing for the stop loss. So it was like risk reward one-on-one. Then what happened is that on Friday this week the market gapped up, and I'm going to show you what happened. So I didn't want to execute. That's when the market. Let me just look at the 15 minutes. That was better. So the market gapped up on the 5th. Okay. Immediately, the first 15-minute candles basically started dropping down, and I thought, you know what? I'll probably be able to. We'll probably have a retest of the market around the breakout area. I mean, this level that I had in my mind, basically 515, and I said, give or take 2-3 cents. That's why I'd like to basically buy it. Maybe in my mind, I thought probably 515, 520, and I had an order in this thing at 520. And unfortunately, the market stopped at 524 and then kept on going. But then, around the level where we started basically turning back up and where we closed on Friday, I didn't feel that my risk reward was good enough to basically come in that trade at this stage. So what I'm going to basically do is, keep on monitoring this thing, obviously. And my next level is going to be this area, this area that I was telling you about, around 570, 610. If we manage to basically push that through, I will wait for either basically I might enter on the slightly on a break above that level or within that level, or I might look for sort of like confirmation of the break, then slight pullback and bam, like this sort of thing. We'll see because obviously now we've got the moving average 50, which is going to be a like big resistance to be going through, and I don't want to start buying now because I don't think that my risk reward is going to be good enough again. So we look at it again this week. This area above the moving average 50 and above 570. I've put some alerts and I'm definitely going to be watching that. But again, you see, next big levels are going to be 760, 860, and $10. So we've got a pretty good potential on the way up. It's not going to be a one straight shot for sure, but probably this is the direction. This is the direction of the momentum. If we basically can pass that, we'll see what happens. Right now, we're we got some kind of like a oversold RSI stochastics, and we're still below the moving average 50. So usually these oscillators, they're good to take within the main direction, the main trend of the move. That means what I mean by that is like the way that I use my oscillators is I will be looking for overbought levels if the overall direction is on the way down, and more even so when we basically start hovering around the moving average 50, which always lands good support or resistance depending on what side of the moving average we are. So around these levels, for instance, when I get a conjunction of the moving average close to the price basically starts stalling here, and I've got also my oscillators that are on the overbought side, then for me it's a good sign. But once you start basically, if you start really moving convincingly above moving average 1020 and especially the moving 50, you can forget about the oscillators. And the oscillators can stay overbought for a long time, but once basically we've reached this sort of like those moving average, we're trading above the moving average, then the oscillator overbought doesn't mean anything. What you will use the oscillator then in that case when we start moving in comfortably trading above moving moving average 10, 20, 50, and the price basically start turning, and we start having a cross as well, this moving average, moving 10 above the 20, moving 10 above the 50, then you will start considering these sort of oversold technical signals to go back into encounter trend entry. All right. So unfortunately, missed the move on Friday, but again, it's a matter. It's a game of patience. You have to basically see whether the risk reward is entitled you to take the trade, and if it doesn't, then you just basically just drop it. There will be another trade sometime at some stage, either in BDRY or something else, but no rush, no need to basically be running after this thing. Especially that it's been performing quite well. I mean, since basically the low that we've established in May, the market has already been up 45% on that. So we'll see what happens, but we'll keep it on the list. Let me see what else. So we've done SC, we've done GMBL, we've done BDRY, GNUS. If you remember, GNUS was also a crazy move. It's in media. It's one of these companies that basically does content for kids, and it's been in the spotlight for the past couple of weeks. And last week was the big move that we've seen. I mean, sorry, this week was the big move that we've seen. Um, let's have a look at it here. So, like I've explained on the one was the I think I've explained that in one of the videos. I traded this one on the and that was basically on that day. Sorry, on that day. And if you remember, basically I came in on the break here around this important level. I think I came in like around 5 3/4, if I remember. But it will be I think it will be covered in one of the morning sessions that we've talked about. But generally speaking, just to recap as well that trade, let's look at the 15 minutes. So I'd come in here on an OPR, breakout, 15 minutes. I think I came in like 575, had a stop that was just basically below 470, so just about a $1 stop loss. And on the kind of next candle here, I took my first take profit here at 670. Then I had a second take profit here just below the level. The next level of resistance was $8, and I took out the second. I was all out basically at $7.90. And like I said, I didn't want to basically play around too much. Unfortunately, what happened is that next day, which was on a Thursday when I think we had covered part of my trade, the market opened with a big gap up. I think it opened, let's see, at 953. So I said, oh damn, I should have kept like a small position, but also, in inside is always easier to think like that. And but the level was, was too high because let me just show you again the on the daily or even on the weekly. These were the levels. The big levels were like between $8 and $10. We were talking about, already quite big levels of resistance here. These were the levels. You see, that's the weekly. So when the market opened at $9.50, and immediately I will show you on the 15 minutes started basically trading up. For me, there was no the risk reward was not worth taking any more trades. So it basically came out like too quick. So either I had a position left over from the day before, or I couldn't play it, which is exactly what happened. So on Thursday, the market basically opens 9:53, immediately starts trading up in the first 15 minutes to a high of 1173. It hit almost to a T to the big resistance level at $12, and immediately started trading down. And not only trading down, but what happened is that the company issued an S3 filing. So S3 filing means that basically they're going to be issuing shares. This S3 filing was in relation to an old financing that they did in the month of March, and to which basically the stakeholders, the shareholders that participated in the financing in the month of March were granted some warrants. So warrants are like basically kind of options. So they had options to exercise these options and to ask the company for a few cents that they paid on the warrants at the time to be issued some stocks that they will eventually basically do whatever they want with it, but sell at any stage. So the S3 filing was for a total of 60 million shares, and that's the reason why basically the market immediately flushed down massively. And you can see we had many trading halts on that day, and the market basically flushed down from the high that we did at 1173 all the way to the low of 425. And what happened is that I think I told you on Thursday when we did the morning session that I said if we had a potential pullback. I said I'm not going to basically participate in this move today because I think it's too high and I don't think the risk reward is good enough. But I said if we were to go back around that level of the breakout, of the gap, and also at that stage, if we look at the probably if we look at the if you watch the U.S. morning session of Thursday, you see that the moving average 10 was around the $8 levels. And I said, if he comes back down to $8, I'll definitely be looking at it. But the market action was absolutely horrible, and not only that, but when you see these sort of huge candles going, huge big white candles with the volume that's going on there, you don't want to basically be in front of the market. I mean, it stopped like $8 for a moment, but then immediately, bam. If I had seen the market around $8 start stabilizing and curving back up, then maybe yeah, I probably would have played it. And what happened is that the market basically went through $8 and then was altered and then went back down. As I said, low of $4.25, which was interesting because here in that level, we were right. If you look on the 15 minutes, stochastic RSI was in oversold territory. We were in that part of the market, this area between 437 and 501, which was a level of support that we've seen before. But not only that, the market had basically filled up the gap that it left on the 3rd of June. So at that stage, I got interested again, and that was on Thursday. But what I did is basically I waited for the market to start showing me, that we had also, look, big candle with quite a big volume. Usually, like I said to you before, when we have a big volume and a big candles hitting some levels of big support or resistance, usually we'll see a reaction to that. And that's what we had. So I turned to the 5 minutes. I'm basically trying to fine tune my entry. And what happens? No, I left basically the dust to settle a little bit, and I tried basically. My idea was basically to try. That was the 5 minutes. So that's what happened. Bim, bim, and then we start having like this candle, green candle, and the market gets altered again, and then you start basically going passing this level of the previous like big red candle on the 5 minutes, which was the high was 579. Okay, so what I did is I attempted a bounce, and the idea was basically to do a quick scalp on that, thinking that what, we've seen a lot of volume on this, and we've got lots of short. There was a lot of guys that basically were trying to short, and they were short the market, and they're going to basically start covering like crazy at some stage, especially in this big level of support. So the idea was basically to play a bounce, just enter like 585. I had a stop loss which was a bit wide because in this market you need to keep your distance. So it was just basically the level of 420. So the stop loss was about $1.65. Obviously my size was reflecting that, and I was kind of like basically aiming as a first TP1 between like moving average 50 or the VWAP. That's why I thought we would basically see a big bounce. If we didn't see immediately a big bounce or some short covering, I would have been out very quickly. So I managed to get out on this bounce for basically a $1.65, and then I immediately put the stop loss at the level where I came in, which was I think 585, and I got stopped at break even here, I think. But I didn't play the rest of the day after. That was a quick scalp, kind of like trade, nothing else. Probably I was lucky, but you have to be quick in these moves. When you see this type of big moves, you have to be quick. Don't overthink. And so yeah, that was it in GNUS, and we'll see if this week we'll get some big action again on that. But it's been definitely one of these uh, one of these darlings of last week. And what else? Oh, and the other thing that we've talked about, you remember that we've talked about this quite a lot over the past couple of weeks. Um, IEZ, oil equipment and services ETF. So we had said last time that just above basically these levels here that we had 858, and especially the last high that we'd seen on that day, we had said above $9 we would start establishing some position if we had some convincing move also above this gap area, and with the ETF of USO or DBO, which happened to be also moving a lot. Let me see DBO. See? So I was waiting, I was kind of like reluctant to go before seeing some conviction, some convincing price action on the oil ETF itself. And what happened is that, I ended up basically taking a position on not IEZ, but XES, which is exactly the same type of ETF, but just basically with more volume, more liquidity. And so I came in on Thursday, and let's look at the details of this. So make it larger on the 15 minutes. So that's when I came in here. That was above the break of the high of the previous day, which was around like $35.30. And I waited for confirmation here, the first confirmation of the break above 35 and 30 cents, and then waited for the second 15 minutes candles to start basically making a new high, which is where I came in at. I entered at 35.46. I had a stop of 90 cents, which was basically just below that level of support, around 35 and and 45 cents. It was equivalent also to about you know one ATR ATR one 15 minutes bar was 50 cents. So it was about it was about 2 ATR. So came in here on new high of this previous candle here. Stop was just below and managed to basically take the first TP for 90 cents right here. Okay, right now I've got I put my stop break even, and I'm working several levels. We'll look at the levels that I've identified. Um, so I'm working a TP2. Let's just make it big on the daily. So right now I was working a TP2 at 42.50, which will probably have been has been executed now on the pre-market today, Monday. Next TP is going to be TP3 at 55 and a quarter, which corresponds to that area here on the daily, which was more or less basically uh, the moving average 200 daily. And ultimately, I've got my TP4, which will be 64 and 20 cents. So I don't know, I don't think we're going to basically go one shot that, but right now I've managed to basically do TP1, TP2 on this position. I hope that you guys, took also some action on what we've discussed. If not, we'll have to see whether we can, what's this? Whether we can find a good pullback entry. But for sure, this is a pre-market that we're seeing right now. That's Monday morning, the 8th, and you see all the stocks that we're seeing right now with huge. Look, this stuff. We've got Enochian. No, that's sorry, that's a biotech, but Noble Corporation. Everyone knows the name. Up 157%. We've got VAL up 75%. Oil and gas. You look at basically all the gappers. It's all oil and gas, obviously. And I think also due to the OPEC meeting discussions that we've had that were also positive. So again, this was something that we've been following quite a lot, and we've been talking quite a lot. Now we've had basically above the moving average 50. We were looking at it. I took the first, new high, um, and we'll see where it goes. For those of you who came in like I did, great. Very glad you did. If not, then we'll have to basically review that in the morning sessions to see if we can find some kind of pullback on the 60 minutes bar chart. But at the moment, I don't think it's going to be a great day for a pullback. All right, so guys, that's it. I'm going to wrap it up. I don't want to keep these video recaps too long, and I think 15, 30 minutes is more than enough. But now you've got the idea of what I traded. I traded like a few other positions, but nothing great, nothing important. I thought that this was the main trades and the main follow-up on the position that we've seen together. I hope it was helpful, and I'll see you in the live session, morning session, or coaching session. All right, take care. Bye.